Gold and silver are slipping modestly this week as investor risk appetite improves, even while uncertainty around trade policy, interest rates, and geopolitics continues to shape the market outlook. Now, the US dollar remains firm, bond yields are holding near recent highs, and traders are watching whether precious metals are simply pausing after a powerful rally or approaching a turning point. Well, technical traders, Chris Vermeulen, comes in, he talks to us. He says markets may be at a critical inflection stage, and we want to find out what's the next move. Chris, thanks very much indeed for talking to us.
Thanks for having me, Devan. Always a pleasure.
Well, listen, over the past few days, we've seen gold ease slightly while the dollar and bond yields remain firm. From a technical standpoint, does this look like a normal consolidation after a strong run or early signs of a shift in momentum? How do you see it?
Yeah, there's a few interesting things happening in the precious metals space. So when you step back, you look at the big picture, the overall trend. We're still in a major bull market for gold, silver, and precious metal miners. The problem is the short-term charts. We all saw that big bout of selling in silver and gold and platinum and palladium and copper. I mean, everything got hit, right? Miners. There was a lot of volume on that downdraft. There was a lot of damage done to the charts. Gold has been resilient. Gold miners have been resilient, meaning they have recovered and they're starting to make a series of higher highs and higher lows back on the daily chart. So that's very good. But silver, platinum, and palladium are really struggling, and they have a kind of a bearish looking chart. So the gold and gold stocks look good, but the silver space definitely got it's got shocked, and now they don't know what to do. I think people are a little paranoid to step back in because they're like, whoa, I could lose 42% in a day or two. That's quite the haircut, right? So we have these mixed signals. Long-term precious metals are still in a bull market. Short-term, a lot of damage was done. And now we're trying to let the dust settle and see if investors are going to settle back in, start to accumulate, and start to drive the market back up. And that's where we're at. We're in limbo here.
Yeah.
And we just need to see how they're going to react.
I mean, that coincides very closely to what you described, right, as a critical inflection point.
Yeah.
What specific signals, and you've mentioned a few on your charts, tell you that bigger move, either higher or lower, could be approaching?
Well, the biggest thing really comes to sentiment. I mean, when, the energy in the air, when silver was breaking 100 and spiked all the way up to about 120, it was pretty strong. The FOMO, if you weren't in it, people felt like they had to get into silver. I was at the VRIC event and all that was unfolding. And I'll tell you, it was the excitement in the room, in the building was pretty epic, right? So the fact that, in terms of an inflection point, as you mentioned, there was maximum psychology, maximum sentiment, huge emotions flying. And when it gets that thick, we have to be, okay, well, if everyone now is talking about it and everybody feels like they need to get in and it's going to the moon, that's usually a sign of at least a short-term peak. And that's when we saw the sell-off take place. So big volume, big emotions, and it was headline news. That is the sign that we're at, this is potentially an inflection point where the market might not recover from. Silver could actually drop to $40 or $35 an ounce, which will obviously shatter everybody's dreams. And the market tends to do what most people don't expect. It is out there to hurt people. So there's a lot of downside potential, but right now you have to give the benefit of the doubt to the underlying trend. The big trend is still up. This is the bull trying to buck everybody off. Until it shows us that it's breaking down, you don't really want to short or, bet against this market, because miners and metals could still hit all-time highs. We could still see $150 silver. We could see $6,000 gold. We're just in this inflection point where we need to see which way it's going to break.
It's interesting you mentioned the short move here, because we had some very big names here, right, that are still so confident on the short of silver. We've seen some of them push that position on the big boy side. What do you think about that?
In terms of people putting on short positions? Yeah, there is definitely huge amounts of money focusing on the short side. We could even see that in the inverse ETFs on silver. The volume was absolutely ludicrous. It felt like everyone, hundreds of millions of shares traded, people betting on silver falling. And then, of course, it did fall. So there was definitely some very good plays and some huge money to be made for that kind of parabolic move. But I do feel like it was a very much so a technical move. This is a signature market move. A lot of people are saying it's manipulation. It's all of that stuff. But this is exactly the type of price action we see in GameStop, in anything that becomes a euphoric phase where the masses pile in. And we tend to see huge volume. People start to bet against it. It lures people into the market, and you see a lot of volume. And I think I think a lot of savvy people saw a peak coming in, and they tried to take advantage of the drop, and a lot of people did. And now the market's just trying to figure itself out. I think the short play people betting on falling pricing was a very short-term tactical trade. And I think they're out of that play right now. I do think if the market starts to break down from here, we're going to see the short plays get put back on because there is a ton of downside potential to profit from. But I think people getting short and betting against this market was, people seeing this frothy market that was about to run out of steam.
All right, let's dig into gold, Chris. Gold is still holding above the key 5,000 level with resistance around that 5,200 to 5,250 area. How important are these levels technically, and what would a break below support signal for investors here?
Yeah, I mean, we can take a look at the charts. Yeah. Gold obviously had a very nice move. This is the daily chart of gold. And if we look at the short-term price action, we can actually break this down to we'll just break it down to a 30-minute chart. So there's some interesting price action when we zoom back over the last a couple of weeks. So I love to use Fibonacci extension, and this gives us an idea of where the upside move is. Now, this was the peak in gold at 5,600. We had the big sell-off, and using Fibonacci extension tools, we can gauge the strength of this bounce that we had, and the strength of this pullback gives us these next upside targets for gold. And so this is what I'm expecting to happen. So what happens is you get this move up, you get this pullback, and based on that, we can gauge the momentum going forward. And Fibonacci has the golden ratio, which is this 618. And typically how it works is if the price moves to 618 and pauses, has some type of hiccup or pause here, it almost always goes up and hits the 100% measured move next. So we're looking for gold to rally to about $5,360. That's the next move. It's primed and ready to do that. This is a bullish chart pattern. This is a series of bull flags. This pause right here, it's really just trying to eat through resistance. And from here, I think we could see a very strong move. So I like gold. I do think gold's heading up to 5,200, 5,300 in change over the next, I think, couple of trading sessions, to be honest. So I'm excited for gold. When it gets to this level, though, that's when we need to really kind of pay attention to what's going to happen next. Because if we look at the daily chart and take a look at how this works, there's what are called inside bars. And so when you have a very big red bar to the downside, or a green bar, but in this case, it's a red bar, all of the rest of the price action that happens as it works its way up inside this bar is still considered bearish. And a lot of times it'll work its way up almost to the top of that bar, and then you get another big red bar, and then it breaks to the downside. So we're kind of like in that calm before the storm. It got hit with lightning. Now it's drifting up, and everybody's licking their wounds and trying to get comfortable to buy back in, and they're drifting the price higher. But we are not in the clear. We are still in this dark cloud, this inside box price action. And as silver runs up to this 53.60 area, that puts us right at the top of this box. I'd be very nervous there. The big sellers step back in and we get another big bout of selling. So again, and when we look back on this chart, Devin, we look at the long-term moving averages, which is the green 150-day moving average, the 50-day, the 20-day, they're all still sloping up and they're all layered really nicely. So this is where we have mixed signals. Short-term chart looks pretty scary, but the long-term trends are there to support it. And to kind of give you an example, like last time we hit a Fibonacci 100% measured move, which was at this blue line, we saw gold have this blow-off move and then had a very sharp pullback. And it took about a couple months to recover. We saw the same thing happen over here. The last time we hit a Fibonacci measured move, it had a sharp pullback. It took several months to recover. And of course, this is right where gold had hit our Fibonacci target, which was at about 5,300. We actually closed out some of our gold position. It ended up having this parabolic move, this blow off phase, just like over here. after you hit your 100% measured move. And then it had this correction, just like over here. So this is still normal price action, but there's no doubt as things get parabolic, they get closer to a major top, these pullbacks become more violent, sharper, scarier, more intense. And eventually one of them will fail and we will see the market break down. But we're in a long-term bull market for metals. Just the short-term price action is saying there's definitely some healing that needs to be done to these charts.
Oh, so that was very interesting to watch, Chris. As I end off, I want to ask you just about all the forces and environments around us, right? Markets right now are being pulled by multiple forces. Trade negotiations, shifting Fed rate cut expectations, and frankly, geopolitical uncertainty. How do you filter out the noise and focus on what truly matters on the charts?
Yeah, well, that's one of the things that I do best is I'm really good at filtering out the noise. I trade purely on price action, sentiment cycles, everything that's related directly to price action on the charts. When it comes to news and fundamental data, all of that stuff, it really doesn't factor into what we do because you will get sucked into that news and it will either make you feel like the market's going to fall and that metals are going to go higher or vice versa. But news and fundamental data is very unpredictable. You don't know when it's coming out, how people will react to it. So I really have just created a routine where I really just follow my own charts, my own analysis. I don't dive into the news and I don't weave any of that into my my predictions or anything like that when it comes to the markets. I strictly use chart patterns and volume and momentum, and that tells us, pretty much which direction to be on and when we need to also be protective.
Chris Vermeulen from the Technical Traders, always a pleasure. Thanks for the insights.
Thank you, Devan. Always a pleasure.